Hello, this is Ron Henderson, President and Broker of Multi-Real Estate Services in Los Angeles. It's February 21st, 2013, and this is a real estate market update for the San Fernando Valley, Los Angeles, California. Depending on how you want to look at it, our local real estate market is either overly healthy or very unhealthy. The quantity of sales are actually down year over year, but it's a very, very active market. Our big malfunction is not the economy, interest rates, or the quantity of buyers that are qualifying for loans, but it's a matter of the quantity of inventory. We only have about 1,800 units for the entire region in the system, and we need approximately 6,500 units to have a point of equilibrium between buyers and sellers. This is way down from approximately 15,000 units back in 2008. This is not exclusive to the Los Angeles or Ventura regions. The entire state is hurting right now for inventory. It's way down. Statewide, it's only around 2.5 months of inventory. This inventory issue is not exclusive to one price range. You actually have to go to $1 million and over for there to be any selection of properties and not have an overheated condition. In this chart, you can see year over year how the inventory has dried up across all price ranges, especially on the low end. Of course, real estate is regionally oriented. Here, just taking Sherman Oaks as an example, we only have 1.2 months of inventory presently in the system. Of course, if you take the trash properties or those that are overpriced out of this equation, it makes the choices even more difficult for a buyer in this market. Of course, the byproduct of this lack of inventory is values are going up. If we look out over a longer time frame, if we look at the median price of an existing detached home in California, we maxed out in the last bubble May of 07 at around 600 grand. Then the values crashed, dropped about 59% and bottomed down in February of 09. For a couple of years, pricing has been stabilizing, but now it's taken off again. Year over year, our real estate's gone up about 24-25%. Since the trough, LA real estate's up almost 50%. Now you got to remember basic math. If you take 50% from 100, it's 50. But if you go 50% on top of 50, it's only 75. What does that mean? It means we have a long way to go before we're anywhere close to the original bubble pricing. It swung too far one direction, too far the other. And we're still a little ways off of the original trend line that goes back to 1970. Okay, let's get to the nuts and bolts of what's going on. Why the inventory issue? I've been harping on this for a long time, and it's finally hitting the media. Hedge funds, big money, foreign and domestic investors are buying everything and anything they can get their hands on in residential real estate that makes any financial sense. They're buying REO bulk sales, 100 to 300 units directly from Freddie, Fannie, or other institutions. There's a lot of cash buyers out there. Mom and pop investors are bidding for investment properties in the MLS to either flip or to hold on as long-term rentals. One of the big problems with all this is squeezing out the owner-occupied buyers and any buyer that needs to get financing. Now, there's multiple offers on every viable property that's priced right. And a seller, doesn't matter if it's institutional or individuals, they always want the maximum price for their property and they want to make sure that the transaction closes. Cash transactions don't have to go through an underwriting process, which has gotten a lot tighter these days on loans. There's no appraisal on a cash transaction. That's a big issue right now because property values are getting jacked up to such a point where the comps may not justify the sales price, and an investor that's coming in all cash, they can just go ahead and close it without dealing with it. I'm going to get on my soapbox for a second. I don't like any of this. The government's enjoying an increase in property values and a perceived economic growth scenario. There are a few positives. There's fewer strategic defaults where people are walking away from their properties because they think it's going to be worth less tomorrow than it is today. There's fewer REOs, actual foreclosures, coming through the system, and banks are liquidating their REO inventory, so they're looking better as a generality. Now, a negative, the government should have the GSEs, Freddie, Fannie, Ginnie Mae, allocate enough REO inventory to the private sector to allow local buyers to purchase housing. It would grow our local economy and allow the individual to buy a property, grow their nest egg, and to grow wealth as it has historically throughout the ages. As the last bubble popping was a unique scenario, so is today's buying opportunity. we have historically low interest rates, and they're artificially low because of quantitative easing. The Federal Reserve is buying mortgage-backed securities, forcing the rates down. That's not going to last that much longer. And property pricing is below historic average and jumping up. Unfortunately, we're having investors realize the bulk of that increase in value and equity position, and it should be our local population. The bottom line, even with all the competition out there, you should buy now if you can. Be smart, but be aggressive with your offer, because you know if you don't buy it now, the property is going to cost you more money later on, and chances are the interest rates are going to be substantially higher. Keep your contingencies to a minimum and have your financing and proof of funds in place so you have the strongest negotiating position possible on the front side. I know buyers and agents get frustrated when they lose out on multiple offer scenarios. If you can, hold the course. Try to get into a property now, because this is a once-in-a-lifetime scenario where you have low interest rates and low property values. If you're in the Los Angeles region, have any needs pertaining to buying, selling, financing real estate, or have any questions at all, feel free in contacting me through my website, mres.com, or the email address or phone number shown below. Till next time, take care.